Hello everybody, today I will be talking about something very interesting for most of you, trading market patterns. This is the way I actually was doing manually trading. I don't do it anymore because I don't have time, and also I have an expert advisor. But for the others this will be very interesting to see how it is done. There are several ways to do it, of course. I will show you what is most interesting. Okay, this is example. We have a few patterns. This is called a channel or a range. Channel or range is because price is flat. It's not going up or down. So what we need to do here, not to trade inside the channel, because that is too dangerous. Of course, it's possible to wait for bounce here and, for example, take short here, but that's actually pretty risky because channel can be break at any time. What is much better is to wait that channel is broken and then to enter the trade, like for example here. So either place pending order below or over this channel. I hope you all know what is pending order. That's the opposite of market order. Market order we enter price immediately, and with pending order we wait for some price level that we told the MetaTrader that either we will dare buy or sell. So if we put pending order here or here, we wouldn't go to buy, but we would trigger sell, and here we will go on. This is another example. This is looks like a channel, but actually it's not. It's a descending triangle. So we see here price is bouncing here like in channel, but here we have a downside angle. Descending triangle means it's actually bearish pattern. So we can also place up and down pending order, but in this case, since it's bearish pattern, I never put pending order for the buy. This is a bearish flag. Why bearish flag? Because it's channel that is going up, like here, you know. So when channel is going down, that is called bullish pattern. So when you see bearish pattern, you will also place pending order, but also below this level where you see this pattern. This is another descending triangle, like here. Also same thing, put pending order here, not here. If, for example, price didn't go down but up, and we of course don't put in bearish pattern bullish order, we will delete this pending order. This is another example. It's actually same thing. So we draw here support and resistance. This is, of course, you also see it's a triangle. When you see triangle, it's actually possible that it go either way, but in this example, if price go into triangle from below, it will most likely go up, and the other way around. You see, if here go from the up, then we get a triangle, it will most likely go down. It's all about chances. It's possible to go either way, but this is about possibilities. So in this scenario, it's always much more likely that it will go that way. This is example also for the triangle. So you see price came from the down, went into triangle. You see, we draw like here, and so we always connect ups and downs, and we got ourselves a pattern. So we will place long pending order because we have a triangle. We don't know just by triangle will it go up and down, but if price went from down to up, from down to triangle, it will most likely go up. So how we do it? We place pending order above this pattern, above, let's say, somewhere around here. And stop loss you put always below last low. So in this example it will be here. I always put it few pips, let's say 5 pips below it. So it will be around here. And if price is triggered, it will be triggered here, and you place your targets depending what you use for targeting. This is again another example. We also put buy in this triangle because you see price was down before triangle was made. And here we put above this triangle buy pending order and below last low stop loss. So this is called a symmetrical triangle. And you see how price later went on. This is what's called descending triangle, which I explained a little before. You see, you connect here the ups and here connects the downs. You see we have a totally flat downside, so it also price is going from the up to the down into triangle, so it's very likely it will continue to go down. So you place pending order again a few pips below this channel, and if trade is triggered, then you will likely have a win yourself. This is how it later went on, as you see, totally as planned. This is called ascending triangle. This is bullish. This is bullish pattern, so it's totally opposite. Again, price, this is another example. You see, actually price went here from the up to the down, but it went up. So it's also possible that it will go up, but it's more likely it will go up even price was low before, because it's more likely that this will be broken when you see this totally leveled channel. And of course stop loss is also below last low. This is my live example. This is actually current live trade I'm having with Ultima EA, but it's very funny how it's following what actually I would do with manual trading. This is euro dollar 1 hour chart. You see here our resistance line. Why it's going here and not, for example, here? Because this is tested. This is tested bounce, and it's more ability than to draw it here. Here we had this is called a false breakout. So this is kind of trick to get you into a trade which will end up in loss. But if you followed what I said, you actually wouldn't enter here. You see this place we had a clear break. This candle before wasn't a break because candle close was below this resistance line. So always wait for a clear break so that candle is closed over our line. And we place always few pips above it. So we would actually miss this entry by just a few pips if we wouldn't enter it. If price went below our line again, we delete this pending order and wait for another shot. And this actually came today, earlier this morning. So I would put it buy pending order here on this green line and wait for the entry. Stop loss always below last low, so it's here. This line would be my target. Why I picked this line? Because this is where last time price reacted, and this was at this level. So it's most likely, even if price continued to go down, it will first reach this level. I also recommend when price move more up to move your stop loss, and I would move it actually here. So you would actually risk maybe just half of what you invested in that trade. Also check the ratio. With initial settings, my target was almost twice as far as from the entry and the stop loss. So always aim for to get more than you are risking. This is around 1.7 risk to reward ratio, which is what I totally recommend. Don't go below 1.5 or so. If you are really successful, you can go to 1.1, but try to go to even to RR. So we would already risk, like if we are trading with 1% risk, only 0.5% risk, and we would get almost 2%. This is also this is 4-hour chart. This is also my confirmation why I entered this trade. You see here this channel. This channel in longer term is actually bearish, but it's still very likely that it will reach this level. We are inside the channel. Yes, I said it's more riskier to trade inside the channel, but this is very high time frame, and I usually just check that time frame to see where we are in higher time frame, if what is likely to happen. This is important. Moving average I use 144, and when we are over it, we are still in the bullish area. You also check this target. We see how price so many times reacted at this level. This is very important to set up your targeting. You can use many tools actually for targeting. You can use Fibonacci, you can use moving averages, you can use last highs and lows. There are many ways to find your perfect target. Actually, I think yeah, you see this is actually live trade. Price is moving even more upwards, and to me it's pretty likely that it will reach target, but everything is possible, of course. So don't over risk it, don't over trade it. Just enter what seems very likely for you that it will reach target. So for all these examples I showed before, traded with time frame, you find for you what suits you the best. Actually traded most on 1 hour time frame, because 4 hour is very slow. You really need to be pretty patient. I did some tradings with 4 hour also, even more successful, but trades there will last even a week for you. So if you are that patient, okay. If not, go to 1 or 15 minutes. And that is about it. You see, you can check later in video all these patterns, and it's pretty simple to trade with. Okay, that is all for today. You feel free to show me some of your trades on my email, and I can give you a word of advice and so that you become even more successful. Cheers.